So good evening, everyone, and a really big welcome to this webinar where we're discussing Circ Residences and investing into US and specifically South Florida and what's driving that area. This webinar is hosted by 12 Star Capital in conjunction with ISG, and really excited to have all of you here. We know time is of the essence, and I know we've got quite a big attendance for this evening. And really the objective is to give everyone who's watching tonight a really unique insight into both Circ as a product, which we are unbelievably excited about, but also a really, really good insight into what's driving the area, the microeconomies from a property perspective and the economy perspective, how to purchase into US, what the process would be, and what that one sort of turnkey solution looks like. So my name is Stefan, and I'm the director of Rainmaker Marketing. And my objective is to facilitate this discussion, but I've got people who know a lot, and I'm going to try and make sure that they do most of the talking. I'll ask the questions, and the beauty of these things is that we want to answer as many questions as any of you watching have got, and that you can post in the chat at the bottom, and then I will direct that to the right person. We want to keep this around 45 minutes this evening, and we know everyone's time's limited, but we will be doing a recording of this, and we will circulate the full recording for those of you who want to pass it on to family or friends or investor partners or shareholders or whatever it may be. And we really wanted to get a team together that you'll see there's a huge South African flavor. You'll hear the one accent that stands out, which isn't, but a team of people who understand the US exceptionally well. I know most of us were all together in Miami towards the end of last year, talking around the planning and the launch of Circ. And then Margaret, who I'll introduce in a second, has a significant investment history into that area. And it'd be great to get her insights into what drives that area from a South African perspective. But really, we want to keep this discussion open. We want to keep it honest, and we want to keep it engaging. And we really want to cover a couple of things. What does offshore property look like, and why does it work for South Africans? Why South Florida? And what is driving the growth of that area, and specifically zoning into what that means for Miami as a whole and Hollywood City, which we'll talk about in terms of really has become this blossoming area, which has got so many fundamentals underpinning it. Understanding the process of how you would invest as a South African, talking to people who've been through the process like Margaret, and then again, understanding Circ as a product a little bit better. So just by way of introduction, in no specific order, I just want to introduce Craig Studnicky, who's the CEO of ISG World, and really excited to have Craig on the panel. They are leading the sales and marketing for Circ, probably the leading real estate firm in South Florida. They've done $18 billion in sales across the history of the group, been involved in about 110 different developments, which means that they really, really know what works, what the market's looking for, and what will be successful. I think we're really going to tap into that knowledge base. They're also renowned for their Miami report that they release every quarter, which is an exceptionally insightful report, which we will be able to share with all of you. And obviously Craig will be able to talk to that. And then a lady who needs very little introduction in South Africa, Margaret Hirsch. I don't think people understand the extent of her entrepreneurship and her business leadership and her property investment. But aside from that, I think, for Hirsch's, in terms of a business that's been running since 1979, has over 20 branches, and really is a household name for every South African who is involved in retail in any way. So Margaret, thank you very much for joining us this evening.
Thank you. I just lost signal, so I missed that whole introduction. But anyway, I'm so happy to be here. Thank you for asking me. And I just thought I'd tell you a little bit of the history. I came down here 28 years ago, and I took a ride down the A1A. I stopped at a real estate agency. I walked in. The lady's name was Nina Lascari. I said, Nina, I want to buy a flat here. We went in, and I bought a flat straight away, and I've just loved it. I still have it to this day, 28 years later. And that was my first investment here. And I could see then that the investment here was very, very good, because then the rand, I think, was about 10 to 1, and now it's 20 to 1. So, from that perspective, it's a really, really good investment as well. I love property. I've become a realtor now, so my handle is Margaret Hirsch Realtor. circ.com. And I think I'm here to help South Africans because it's really difficult. I have to tell you, it is difficult to move countries. First of all, you leave all your friends, your family, and everybody behind. So you don't have the plumber, the hairdresser, that type of thing. So I'm here to help South Africans who want to come here. And I think Circ, it was my first investment into this type of thing. And with the new buildings, it's just so much easier to invest in a new building than the old building. Because here they have problems with the old buildings. There's always something going on. You have special levies, you have to have so much money in the account and all that type of thing. Whereas with new buildings, it's that much easier. For us as South Africans to get our money out, first of all, is difficult, and two, it's expensive to buy here. But I do think that Circ is really the way to go, because if you want to, you can always come and stay here yourself. And if you don't, you can rent it out straight away. And that's what a lot of South Africans don't know, that you can't buy a place and rent it out straight away. So they sometimes buy, and then for 2 years, they've got to pay the levy and all the fees and the taxes and everything without being able to move in. So if anybody in South Africa is interested, I'm there to help them. I've been through it. I know how difficult it is. I've learned the hard way. It's a very expensive way to learn, but now I know, and I'll be there to help you. And as you can see from behind me, the beautiful pool at Circ, it's just amazing.
Yeah.
Thanks, Margaret. And then I think just quickly to introduce Stuart, who's the director of 12 Star Capital and American Dream, have been involved in significant property transactions in the USA, Portugal, and Mauritius, but just alone in terms of their extent in terms of Hollywood City, which we're going to talk about, is the involvement in over $400 million in projects over a period of time. And then Sheldon Halcrow, who's the president of Calio Capital in the USA, and basically a turnkey solution in terms of a family office in the US, but also in terms of all the different components around setting up your LLC, de-risking, understanding the ability to leverage your asset, and just going through that process. And I think that's what we'll go through. So again, just a reminder, the questions that anyone can pose at the bottom, and we'll try and get through those. But I think, sure, just off the back of what Margaret has said, I just want to just for you to paint the picture in terms of your background, specifically as 12 Star, into the area, into Hollywood City, and very specific into Circ.
So, Stefan, I mean, it's been a phenomenal journey. I first came to Hollywood Circle way back in 2010 on a trip to have a look at a building that we were just going to put a facade on. And try and increase the rate per square foot. And it was on that very first trip, and I was with the developers, and we went into a meeting with the City Redevelopment Agency, and they had their blueprint in terms of their vision board for the city of Hollywood. And I mean, it was just unbelievable in respect of what they had proposed in terms of the redevelopment of this whole node. And 14, 15 years later, here we are, we've got 2 successful buildings that have been developed and certainly become very iconic. And I mean, I've just seen the city evolve into a real lifestyle environment, and it's so well positioned. And I think it's just a great product offering in terms of an ownership possibility for South Africans. So I've had a very, very long association with Hollywood. I know the area very, very well. And obviously, we've got a lot of South Africans that have moved across and settled in the greater South Florida area for obvious reasons, which Craig will unpack. But a phenomenal opportunity, and really a great opportunity for South Africans to invest.
And I think, I mean, like Margaret said, I mean, we're all sitting in different components. Well, I'm floating somewhere in the sky from the building, but everyone's, and obviously a completed building, very successful tenancy base. But if you look behind you and look back at that Hollywood Circle, I mean, a very, very different picture now to what it was 10, 15 years ago, hey?
Absolutely. I mean, you know, I think that, you know, there have been so many macro developments that have taken place around Hollywood. You've had the harbour increase its cruise liner terminal. They've doubled in size. The airport has doubled in size. I mean, it's a world-class airport to arrive now, so it's very, very, very easy access in and out. You've now got the train line, which runs from West Palm Beach all the way through to Miami and then onwards to Orlando. And that makes, you know, traveling between those places very, very easy, and has made the city of Hollywood like an epicenter of development. I mean, yeah, I mean, if you look at the City Redevelopment Agency in respect of what they are still going to be doing, plus golf course redevelopments and everything else like that, it's good timing in terms of investing into a property in the city of Hollywood.
And Margaret, just from your side, I mean, as you said, I mean, there to aid South Africans in the process. But I mean, I know that you've got a portfolio, extensive portfolio around the world. But what is it about Miami that has drawn you so closely from an investment perspective?
Well, firstly, I love the climate. It's the closest we'll get to South Africa. You know, we're Durban people, so it's very, very similar climate. It's really nice. The people are very, very friendly. It's not crowded like New York and Los Angeles and all those places. It's a nice, relaxing place to be. The property value is very, very good. I still think that, you know, what you can buy here, even though we've got to translate everything to rands, your value for money is really, really good. I think this is really the place to be. And I just love it here. It's a beautiful area, and it's booming at the moment because everybody wants to be here. But I think the biggest thing is the tax. You know, there's very, very low taxes here, and I think that's one of the big things that pulls people in, because people don't realize that here in America you get taxed on everything. So you know, I think the tax is really, really good. The weather's good. The jobs are plentiful. When I applied for a job, I got offered 250 jobs in like a space of a week. So yeah, it's an incredible place to be. I couldn't wish for anywhere else. And as you say, Hollywood is lovely. It's a new building. You've got your Publix right downstairs. It's very close to the beach. I love the beach. I live right on the beach. But yeah, you've got everything you want right here.
Then Craig, I mean, obviously want to bring in the big guns here when you talk about the area and the growth. But we're going to talk about Circ a little bit later. But I think first and foremost, it's the area. What's driving South Florida and what's driving Miami specifically?
Well, I've been here for 32 years. My company has sold 118 projects. Appreciate you, Stefan, telling everybody it was around 18 billion. I forgot how much money it was, but I've been through, I guess, 6 different US presidents since I've been here, which suggests that I've been through different cycles. This particular cycle we're in, I couldn't have seen coming. It really kind of began about 10 years ago, 8 years ago. Donald Trump, in his first term as president, passed major tax reform legislation in the United States. Major. And let me just say, it's very difficult to pass any kind of major legislation in the United States because it requires that the president controls all 3 houses of Washington, D.C. What does that mean? It means the White House, it means Congress, and it means the Senate. The political party in charge has to control all 3 houses. Otherwise, change is really very slow in the United States. However, Trump got elected in 2016. The Republican Party, which he's attached to, controlled Washington. He passed major tax reform in 2017, tax reform 17. Florida, excuse me, and Texas were 2 giant winners from that tax reform legislation. States like California and New York, the absolute opposite. So what it did was it created a very favorable environment for both individuals and companies to consider coming to Florida just for tax savings. What Margaret just described in terms of climate, yeah, that's always been like the foundation of what draws people to South Florida. It is unquestionably the nicest weather in the US, unless I guess you go to Hawaii, long way away. But on the eastern seaboard, we own it. We have the nicest weather by far in I'll say the whole continental US. The tax reform 17, it started moving a lot of people that weren't just coming here to vacation, that weren't just coming here for the nice climate. They were coming here because they saw business changing, not just domestic business, but international business. Because please remember, where Hollywood is a 15-minute drive, 20-minute drive to Miami International Airport. Miami has become the international gateway to South America for the US and, for that matter, Canada. It just has. Add that now to this domestic flight, and you've created quite an alchemy of different businesses all over the world that are now centering in South Florida. However, as good as 17 was, 2020 showed up. COVID turned out to be the catalyst that caused a lot of individuals and companies to say, you know what? We've been thinking about going to Florida since tax reform 17. We're going to bust a move now. In 2021, there's 50 states in the US, Stefan. Out of the 50, the two fastest growing states by far in terms of population are Florida and Texas. It's like I'll use a boxing analogy. It's like Frazier Ali. Who's number one? Who's number two? Who's number one? Who's number two? It changes every year. It's either Florida sometimes, it's Texas sometimes, but we're always 1 and 2 and 1 and 2. People are moving to South Florida in unimaginable numbers, and all because of mostly stemming from tax reform 17. And it's just building and building. You know, since COVID, there have been over 204 companies, Fortune 400 and Fortune 500 companies, that have either relocated their corporate offices completely to South Florida, whether it's Miami, Fort Lauderdale, or Palm Beach, or they're opening regional offices. Like Goldman Sachs just opened a giant regional office in Fort Lauderdale, 204. Well, they're bringing employees with them too. We are seeing, in short, Stefan, but this is actually a kind of a fun story for me to just tell, because I watch the facts every day. We have a demand curve that we've never seen before, that was almost unimaginable 8 years ago. But when you turn the coin over, we have a little bit of a supply problem, which I think makes for a great opportunity for an area like Hollywood. I love Hollywood because Hollywood is the area where Miami is now coming to. Miami, Margaret's right. This is not Los Angeles. This is not New York in terms of congestion. Miami's getting kind of close to that. It's really very crowded and jam-packed Monday through Friday. Miami is now discovering Hollywood. I saw that about 2 years ago. And when the owners of Circ asked me to consider taking on the sales and marketing for Circ in Hollywood, oh God, I jumped all over it, because I know how Miamians are discovering Hollywood. It's relatively uncrowded. It's 15-minute drive to the south. But here you feel like you can breathe again, and you get the exact same climate conditions and business conditions that you get in Miami. And Margaret sees the opportunity. I spent some time with Margaret here on site a few weeks ago. When you compare the values, the pricing of Circ compared to other properties in the area, it truly is a bargain. It's the first major condominium conversion in like 18 years in all of South Florida. And it just happens to be here in Hollywood. And it's capturing that market of Americans that are moving here. Are you ready for this? That simply need housing. They need housing. And there's not a lot of standing inventory for them to choose from at the moment. Developers are trying to get into the queue and start building again. They're working as hard as they can. But that's not going to happen. New inventory is not going to happen for several years. So, in short, when I think about the demand curve from California, New York, Michigan, Texas, I mean, every state in the US are moving here. And then match that with the amount of housing we have for sale, it bodes for one hell of an opportunity to consider Hollywood. So that's the macro, and I can back it up with some interesting charts here in a bit.
Craig, I mean, you know, if I just look at the occupancy levels, both in the Circ and a building that we're involved in across the road, it's been consistent in terms of occupation around the 90s. And then if you look at the rate per square foot in terms of what they're achieving versus what we had projected in the early days, I mean, it's just outstripped it. And I mean, that trajectory is not going to be slowing down. You know, the vacancy factors are exceptionally low, and you know, these are quality buildings which tenants like, specifically for investors that are wanting to have good quality tenants.
And I think what you don't
let me expand on that, if I may, Stuart. Let me expand. You know, when I talk about the population gains since COVID, especially, we've been averaging over 1,000 people a day relocating to the state of Florida. Half of those are South Florida. That's Palm Beach, Fort Lauderdale, and Miami. And for those of you that may be getting confused, Hollywood is right smack dab between Fort Lauderdale and Miami. It's right in the middle. It's like a hole in this beautiful donut that not just Miami, but Fort Lauderdale people are starting to discover as well. But Stuart, to your point, and by the way, here's how they measure that. This is all U.S. Census data. They add births and they subtract deaths. They add people moving in, and that's driver's licenses and tax returns. And then they subtract people moving out, and that equals X. X for Florida is 1,000 people a day, half of which comes to South Florida. Stuart, to your point, yeah, the rents are outperforming what you had on your business plan, because in short, we have more people moving here than was anticipated and not enough housing.
Yeah.
And the demand curve movement, I can assure all of you, it's in flat out momentum. And you know what momentum is. Once the hardest part of momentum in anything, whether it's business or sports, is getting the start of momentum. But once you're in momentum, it just kind of grows all by itself. You know, one of the biggest problems I have since COVID is finding seats in private schools or charter schools for the families that are moving here with their children. The schools are full. They're full. We weren't expecting this kind of a population growth, and so much of it, I'm telling you, has been fueled by the policies of President Donald Trump in his first term. That tax reform, it worked. It worked. And it's going to be very, very hard to change tax reform going forward. But anyway, Stuart, to your point, yeah, rents are doing well, and they're going to continue to do well because of the strength of the demand curve coming to South Florida. Yeah. Sorry, Margaret, I know you wanted to say something.
No, I just said what I think a lot of people don't understand is the lifestyle there, because it's a community lifestyle, and you don't have to go to the gym. The gym is right there. You don't have to go to the pool's right there. It's got absolutely everything that you need, and it's a big area. So if you've got children, you don't have to worry, oh my God, I don't want to live in a flat with children. There's a really big community area downstairs where they can run, they can play, they can swim, and it's really, really beautiful. I mean, it's beautifully done. The whole place is done. You've got restaurants downstairs if you don't feel like cooking, and go to the restaurant downstairs and have a meal. So it's the whole place is like one big community. I think that's part that a lot of South Africans don't understand, because we don't have anything like that.
Yeah.
Well, if I may, then let me expand on that. Forgive me, because Margaret, you nailed a very strong point. Since COVID in South Florida, these condominium communities that we call all-inclusive that's the talk of the town. What's all-inclusive mean? You can park your car here on a Friday and not need it until Monday. Because you're right, Mark, what we have here at Circ are 2 restaurants inside the building. We have a magnificent gym, magnificent spa, a pool deck that looks like it belongs to a Four Seasons hotel. We're adding more amenities, Peloton rooms, yoga rooms, children's playrooms, workstations, because remote working is kind of here to stay. And these developers are adding a whole facility of WeWork facilities inside Circ. All of this comes down to the concept that falls beautifully into this new model that's called all-inclusive. That's what these Americans that are moving here, they always ask about a restaurant now in every condominium community. It's almost becoming as important as the swimming pool, because they just don't want to drive. They just don't want to drive anymore. For South Florida, like the whole world, is getting a little crowded. Hollywood's not yet. But the idea of parking your car on a Friday and really and truly not needing it until Monday, exhale. Those are the communities that are taking off. Circ has 80% of what it needs, but the owners of Circ are adding the other 20%. In a year, this is going to be, because the building's up, right? It's a puppy. It's only 5 years old. These buildings are meant to last hundreds of years. I mean, when they finish adding these additional amenities, this is going to be a lovely place to live. Lovely. And Craig, you're catching Hollywood just as it's about to turn way up.
Craig, I wonder if you wouldn't mind just elaborating a little bit more for educational purposes. But, you know, we had the tragedy of the Surfside building, which collapsed in downtown Miami. And that has had major ramifications in respect of buildings that are considering doing condo conversions, or as we know, sectional title conversions here, in terms of HOA contributions, surplus funds, and obviously insurance underwriters. So, you know, if you drive around South Florida now, you'll notice a lot of buildings with scaffolding and painting and renovations being done, structural things being done. So I wonder if you wouldn't mind just elaborating on that to enhance why it's so important with this as an opportunity, because it's a relatively new build, and obviously, you know, the developers are making sure that the reserve funds for the HOA are, you know, start off with a decent, opening balance.
Decent cushion, yes. Yeah, we are now in the 3rd anniversary of that tragedy, of that condominium that collapsed on the beach in Surfside, Florida. And for those of you that don't know Surfside, it's a part of Miami Beach. It was only a 40-year-old building. They realize now, forensically and diagnostically, that the building collapsed because the swimming pool collapsed and it brought down a couple of the towers. This building was built way before the zoning, or I should say the building code changed in South Florida. We had a Category 5 hurricane come through South Florida in 1992 called Hurricane Andrew. And the result of that is we've created the strongest building codes in the United States, second to California. California builds to earthquake standards. We build to Hurricane 5 standards. Circ is built way after Hurricane Andrew. The project in Surfside was built in the 80s, and it didn't collapse. No one believes anymore it collapsed because of bad construction. It collapsed because of very poor maintenance. And their reserve for replacement accounts dried up, and they weren't spending money to fix rusted columns and rusted rebar and leaks in swimming pools. So the state of Florida reacted. I think they overreacted, but nevertheless, they reacted. They now require all condominiums in the entire state of Florida to have adequate reserve for replacements in their condominium association operating budget. That means that you have to have enough money in real cash, not a promise, real cash, in your reserve account to repair the roofs, the elevators, leaks in the swimming pool, rusted rebar that may be discovered from balconies, because it happens. We live close to the ocean. What's happened, if I may, let me show you a graph. Because what you're touching on, Stuart, is kind of become the talk of the real estate world here. No, not that one. That's I need the one that shows supply. Hold on one second, folks. This is population stuff, which we already talked about. That's not the one I need. I need the one that shows, no, not that one. That one. Hold on. Okay, so unfortunately, if you could slide, what this shows, and all the way to the left, is the amount of inventory for sale that's less than 10 years old. What realtors are doing today is they're aging the supply, because anything that's 30 years and older, I can assure you, they do not have adequate cash in the reserve account. And if you look all the way to the right, that's where you see all the inventory popping up, everything that's more than 30 years old. At the end of Q1 this year, we had close to 16,000 condos. Now you have close to 18,000. Now let's flip the coin for a minute and look at the condos that are less than 10 years old, like Circ. At the end of Q1, there were 800 for sale. Now there's 700. That's where people are buying. Because even here at Circ, what do we have in the reserve account? 16 million?
Yes.
The reserve account in the condominium association here at Circ is flush with $16 million in cash. I can promise you that's all the money you'll ever need for the structural components for at least another 10 years. This building fits the new Florida law easily because it's new and because you've got developers that are fully funding it. We're not alone. Out of the 709 units that are on the market, Circ's included in that, which means there's not a whole lot of inventory available for people to buy that's less than 10 years old from Miami, Hollywood, Fort Lauderdale, and Palm Beach. So what I'm trying to show you here is that's where all the demand is. What realtors are doing in South Florida, and Stuart, your question was spot on, because this is the if you have your finger on the pulse of what's happening in South Florida, you're very much engaged in this discussion. Realtors don't want to show anything that's over 30 years of age because of the fear of special assessments, and they're not wrong. These special assessments are being charged because the condominiums don't have enough cash. So they knock on your door and they tell you, you owe us $100,000, you owe us $200,000. Sometimes it's as much as $400,000 in special assessments. Well, if you're an owner of that unit and you're retired, you're selling. You're selling. You called your local realtor and you listed it for sale. And that's why you see so many units listed for sale that's north of 30 years of age. But here's the thing. You know who wants to buy them? Nobody. Because nobody wants to walk into special assessments of 100K, 200K, 300K US dollars. You know who? If you did find a buyer of that stuff, you're never going to find a mortgage lender that wants to mortgage that property because of the same fear of special assessments. So instead, it's a lot of inventory, but it's inconsequential. Nobody cares about it for all the reasons I just said. So what they're doing is they're looking at the stuff that's 20 to 10 to 30 years old, of which now there's under 2,000 of those for sale. And the stuff that is the cream of the crop, the belle of the ball, is all of the inventory that's less than 10 years old. Circ is part of only 709 units. So yes, those are the most attractive buildings. Every mortgage lender in the world wants to lend on them. People want to buy them. Investors want to invest in them because they know there's no worry about any fears of special assessments. They are relatively new. And they're also, if you're an investor of real estate, Well, you really want to, eventually you start thinking about your exit scenario. I buy something at Circ. Let's assume I sell it in 2 or 3 years. Will there be a market for that? Well, yes. There's so many people moving here and we don't have enough supply. And because this is a relatively new property, anything that's less than, frankly, 30 years old, let alone 10 years old, will stay very popular for quite a while. The state of Florida is not going to change this condo law anytime soon. It was anytime soon. I mean, they could modify it maybe in about 5 to 10 years. But in the meantime, it's this new inventory that is without question the most attractive. And now you understand, have a little more insight as to why. So, you know, one of the things I keep saying, and I'll shut up for a minute, is I've never seen the demand curve so strong ever in the 32 years I'm living here, matched with such tight, crazy supply. And then add to that the Surfside, Florida tragedy. Supply just gets tighter and tighter, which I just believe bodes very strongly for an investment opportunity in a property like Circ, because it's in Hollywood and because it's new. So yeah, that's a little bit of an insight, Stuart, into the effect of what happened 3 years ago.
Thanks, Craig. Thanks. I must say, I saw that passion firsthand in the office, but I'm sure anyone watching can see that passion pouring through the screen, which is really amazing. And I think we were sort of blown away by.
But you have to admit, Stefan, you have to admit the numbers are compelling, are they
not?
No,
it's absolutely. The numbers don't lie, 100%. Stuart, I mean, we're going to talk about mortgage solutions in a bit in terms of how to price the African market. But Sheldon, I know you've been sitting patiently, but there's a lot of value from your side. And I think Margaret mentioned earlier, it is daunting as South African. How do you go about it? How do you know you got the right partners? How can it be one-stop solution? What are the starting points that a South African has to know about investing in the US?
Yeah, so I mean, just as a reminder, so my background, Calio Capital is a South African company, but probably about 4 years ago, they established the branch in the United States, and the business that I represent specifically caters for affluent and high net worth South African families looking to come into the United States. Now, whether those are families immigrating to the States, educating children in the States, or investing in the States, that's pretty much what we specialize in doing. Given that, from my understanding, there's quite a strong South African audience. Just to bring it back to the South African audience, size of markets. I mean, Craig, you heard him very excitedly talk about Florida. Florida is one of 50 states. It's not the biggest state, but Florida is 3 times the GDP of South Africa. One single state is 3 times the GDP of South Africa. In South Africa, if you're looking to invest in the markets, I'm talking the JSE, and we understand there's more than one, but the JSE, you're down to about 300 listed shares. It's half of what it used to be when I was at school in the 80s. And there's a single stock market. We all based on the East Coast over here. There's 13 stock markets just on the East Coast. So in the United States, we spoiled for choice. You know, I get very excited because I'm based in Florida, but I take a bit of a step back. If I am caretaker, custodian of a family's wealth, I want to manage risks. I want to make sure that we're properly diversified. But there's no question, property exposure is an anchor in a client's portfolio. I'm really looking at 2 things. If I'm evaluating this for a South African client, I'm looking at total return. And if you're looking at return, you're probably going to want to look at 2 things from this property: rental yield and capital appreciation. And both of those, if you're evaluating the return on the investment, you got to agree that both the rental return and the capital appreciation, there's probably going to be a hedge against inflation with the property values and the rental incomes as they rise. For South African investors, I think tax is a complicated subject and is not something we can adequately cover in a 45-minute webinar. But as a South African resident, you pay tax on worldwide income, but we can introduce you to a CPA that can have a look there. Probably 2 things to consider outside of the property itself is, do you use your own funds or do you gear this property? It doesn't have to be an either-or decision. You know, so the way that we assist South African families, if they have an investment portfolio, I'm talking of listed securities, relatively easy in the United States to raise a facility and use geared funds, as long as the return on the property is outpacing cost of borrowing. Yes, cost of borrowing is high, but we acknowledge that we're probably going to see the first of the rate cuts later this year, now that they've arrested the inflation problem. And one other consideration, you're probably going to want to buy this inside a SPV, a special purpose vehicle. In the United States, the common term this side is the LLC. For South Africans, the LLC is something in between what you used to know as a closed corporation and PTY. That's a simpler form of company. Buying into that, you have a number of different tax benefits, which we can discuss. You know, interest payments on loans may be tax deductible, and you've got a lot of tax advantages.
And Sheldon, just in terms of the gearing, I mean, obviously, as Africans, we probably don't necessarily exposed to the ability to re-gear against the appreciating value of the assets. I mean, would you say that it is quite a different outlook in terms of far more ability for South Africans to gear the assets?
So I think my experience in the American market is that they're far more aggressive with gearing options. I wouldn't advocate the too high gearing on this side. You could ordinarily gear a portfolio up to 65% loan to value, but I think that's very aggressive. The nice thing with the property and the gearing is one of the questions that everyone's going to ask is, well, is it easier just to go into a listed portfolio of property where you've got some commercial, industrial, and retail relative to this unit, buying one of these units? I suppose the benefit for this is an element of direct control. You're managing your own property. It's a tangible asset, so if you're driving through South Florida and Hollywood, it's probably one of the most attractive properties I've seen down in the area. There is the potential for higher returns, and more than anything, it becomes a personal use asset if you're spending time in South Florida. And with those four, the banks are quite comfortable for South African clients to lend money. One of the issues South African clients might face is the absence of a credit score. Credit score is paramount in the United States, but we have solutions. Again, I've mentioned the pledged asset lines against portfolios, or introduction to banks. Craig would also have names that do non-resident finance for South African investors.
And Stuart, I know there is a unique mortgage solution for the South Africans. Can you touch on that?
Yeah, so we've teamed up with Steve Cheney, a chap who I've also known for many, many years. But his business, he's a mortgage broker, and they focus on non-resident loans. So he's very well versed. And his mechanism to assist South Africans is relatively seamless. So I know that Craig and them are using Steve as well. So yeah, he would be our point of call in terms of those that were wanting to raise a mortgage.
Well, they're great too, by the way, Stuart. They're here on site every single day. So Stephen has become like part of the family here now. As we get to rib him quite a bit, he gets to do it right back to us as well. But I just love how professional he is. He has solutions for everything. He's clearly been in this game a long, long time. He's very, very good mortgage broker.
And a nice guy. Nice guy. So always nice to deal with nice people.
I think one thing he's
got a great team.
I know you can't believe Craig forgot anything, but one thing that he did forget to tell you is that when you buy the first 2 years, don't they pay your levy for you? What we call a levy, you call it the HOA or whatever you call it here, but we call it the levy. So that's one of the big advantages of buying here. You don't have to pay your levy for the first 2 years because the developer's paid it for you.
Yeah, I asked the developers to consider that, because here's what really happened. They rented all these units. In 2020, this building was brand spanking new. There were so many people coming here. They were renting like crazy. Hindsight's always 2020. They admit they left some money on the table. They rented it for this, and the market today is this. So by paying the condo fee, that's what we call it, the condominium maintenance fee for 2 years, the investor doesn't feel the stress of any negative cash flow. That's why we're doing it, because when these leases, by the way, most of the leases are up next year. So we'll get the new tenant to pay here. Most are paying here. It's happening already as some of these units come up to renewal. We're releasing the units at the higher market rate, at just the market rate. I've already sold quite a few of these to South American investors. South America has always loved South Florida. They love investing money here, because it's Florida. Property appreciates in value. Residential property, particularly houses and condominiums, do extremely well. So I've already played matchmaker. I'm putting tenants together with investors from Argentina, from Colombia. And as the rents come due, I'm getting the higher rate. So the condominium maintenance fee credit becomes a real bonus for the investor, a real bonus. So yes, we're offering that as well.
Craig, just to maybe give some ideas in terms of what rentals are being achieved. The one beds and their different configurations, they range from about $2,300 right up to almost $4,000 in some cases. And then 2 bedrooms are sort of around the $3,000 per month currently. The 2 bedrooms, and then the 3 bedrooms are going right up to $4,000. So, I mean, those are really good rentals.
When you get to 4,000, you're getting back to the market rent. You know, what we call the economic rent. That's what we're actually getting. It was 4 years ago. Well, it went like this because of all the people that are coming here. So how do I fill the gap? The condo fee credit. That's how we're doing it. Yep. So for the investor, with assuming, you know, going back to what Sheldon said, if they put, you know, 40 or 50% down, this cash flows beautifully for an investor. So now you're sitting back and you're watching Hollywood take off. I said it, if I may, let me give the audience a glimpse of why I'm so stoked about Hollywood. Hollywood, the golf capital for the golfers out there. The golf capital of Florida is currently Orlando, Florida, where Mickey Mouse lives. But it's shifting. It's starting to shift to Hollywood Beach. There's a golf and country club that opened up a couple of years ago, maybe even just 18 months ago, known as Shell Bay. For those of you that know South Florida, it's the old Diplomat Hotel golf course. It was purchased by a couple of guys that know how to develop golf communities, and they developed Shell Bay. The initiation fee is $1.3 million US. Well, that seemed a little expensive to me. So my team and I, we went in Google and everywhere else, and we looked it up. It is the most expensive golf and country club in the United States, Hollywood Beach, Florida. It just opened up. Believe me, more than anything in California, more than anything in New York or Michigan or Texas. Believe me, I did the homework myself. It's 1 mile from Circ. And since then, there's 4 other golf communities that have been announced in Hollywood. 2 of them are PGA venue golf courses that are under construction. So when I tell you that the golf capital is about to shift to Hollywood, I'm not the only one saying it. And I'm saying it with some real examples. And for the investors out there, please know that when a real estate developer, particularly here in Florida, when they marry their community around a marina or around golf, they're attracting a different level of buyer/homeowner that wants to reside in this neighborhood. And Hollywood is just in the very beginning stages of that. So again, we're right between Fort Lauderdale and Miami. It's where Miami for sure is starting to move to. We're relatively uncrowded. The condominiums here are 50% of what you have to pay in downtown Miami in June of 2024. You give me June of 2026, I think we're going to be talking about a whole lot of different pricing going on in Hollywood as more and more people come here, and more Shell Bay people, those that join the most expensive golf and country club in the United States, reside more and more in Hollywood Beach. So that's another reason why I see this as just a great opportunity for everybody, for investors, for the guys that own this, for realtors, for everybody. This is just, you're getting involved in Hollywood at a time when it is launching its transformation to a high-end community.
Craig, and as these rates start to come off, I mean, it's just going to be the market is just going to absolutely fly. And specifically with Circ, you're going to be sitting with some nice equity. So it's just really perfect timing.
And I think it's obviously. No, I mean, it's obviously just an important point. I mean, is that interest rates are probably as high as they're going to be. Those rental escalations. I mean, Craig, I mean, what are the annual rental escalations that guys are getting?
Well, is that more of a Sheldon question? I mean, right now, the 30-year
fixed for Craig,
for most foreign loans is around 7%. But to your point, Stefan, rates go down just by 25 basis points. You're going to see a stampede of people buying property in the United States. A stampede. There's so many people on the sidelines that have been told by their friends and family, don't buy yet, wait for mortgage rates to drop. Once they drop a little bit, I've seen this in my I'm in my 60s now, guys. I've been selling real estate for over 40 years. I've seen this so many times. Rates go down a little bit, and you get those early settlers that jump out and start buying, and they start the next cycle. So, as Stuart told me, it looks very likely that the U.S. Fed's going to start in September. That's not that far. That's not that far away. You drop those rates just a scotch, a little bit, yeah, you'll see a buying stampede in Florida and all over the United States, all over. And it's about time. All the banks all over the world lowered rates. We're so slow here in lowering rates. I wish September was now, but it's okay. It's only a couple months away.
Craig, my crystal ball predicts even more rates next year. So
from your lips to God's ears, man. Absolutely.
Well, that is going to be. But Craig, just in terms of rental income, so here we used to on a property, you're going to see an escalation on your rental income of 6-7% if you're doing well. What kind of rental escalations are owners getting if they've got a strong tenant base per annum?
In the last 10 years, Stefan, we've seen rental rates as well as home prices in Hollywood, appreciated around 8% per year. Coincidentally, it's the same number. It's right around 8% per year for really like the last 10 years. Now, I'm saying not just math, that's just studying where it was and where it is, where it was and where it is. That's it. I'm saying that you can maintain the belief that that's going to continue because there's just not that many upscale rental communities like a Circ. And now we're converting Circ to condo. So you just took 400 units out of the rental market, which puts more pressure, upward pressure on rents on the remaining multifamily buildings. And then, and Stuart, to your point, if you decide to convert the building across the street, 1818, say next year, now you've just taken another 250, 300 units out of the rental market. So when I on this webinar, when I look at everyone and say you can expect a continued 8% plus increase in rental rates, this is why. We're taking rental communities out of the market. We're adding more and more people moving here. Yeah, I wouldn't worry about the rental rates continuing to escalate up at a nice, comfortable level. 8% is a little rich, I agree, but we have crazy demand here. This is not like any other community in the United States. And just coincidentally, Stefan, it's the exact same rate where we've seen condominiums and houses appreciate at the same rate, particularly condos, 8% per year for the last 10. A lot of that happened since 2020, undoubtedly. But the movement of demand since 2020 just gets stronger. We are totally in momentum. So I'm pretty comfortable forecasting that kind of an appreciation rate on the for sale stuff as well.
Which is hard for in South Africa, we used to high sort of escalation rates, but for here, it was flat for a long time. It was very, very low, and now it's really picking up.
And I mean, when we talk international markets, sometimes we use cumulative yield, which isn't really a thing, but cumulative yield would be your rental yield plus your capital appreciation, but also the dollar hedge. I mean, like Margaret was saying, in the last 3 years, the dollar has appreciated by 27% against the rand, which is 9% per annum. So the money you've invested is appreciated. That's additional cumulative yield. And I think that's what a lot of South Africans sometimes forget. It's just almost this compounding yield, which is very unique.
Mm-hmm.
Well, let me just add this. I know we don't have that much time left, but we've had a couple of. I'm going to go back to this demand because before we finish, I want the audience to really understand why I'm so enthused about this. We've had a lot of Fortune 500 CEOs relocate here. For example, we had a guy named Carl Icahn. He moved Icahn Enterprises right after Tax Reform 17 in 2019. He relocated them from Wall Street to South Florida, to Miami Beach, actually. We have a guy named Ken Griffin that owns a company called Citadel, one of the largest hedge funds in the United States, based out of Chicago. Last year, he uprooted the entire company from Chicago, moved them to Miami. There's a guy named Jeff Bezos that started a little-known company called Amazon. He actually grew up in Miami Beach. He relocated to Seattle, Washington, because that's the world headquarters of Amazon. However, last year, Jeff Bezos returned to Miami. He has purchased 3 houses in a community known as Indian Creek. Next to Coral Gables, without doubt, the most expensive community in all of Miami Beach. It's got this lovely golf course. It's a magnificent golf course. To become a member there, you have to be like you know, you have to be like a senator or a congressman. It's just really, really hard to even get into that golf club. He paid an average of $80 million per house, and he times three. And what I'm suggesting is when the CEO and chairman of any company relocates to Miami, I've always seen 2 or 3 years later, the company follows the boss. Well, the boss is making one hell of an investment in this community called Indian Creek. Amazon's already signing leases on tens of thousands of square feet of office space, not warehouse space. But yes, I'm suggesting that's not too far behind. Is it possible that Amazon relocates their world headquarters from Seattle, Washington to Miami, Florida? Oh, you betcha. Because they're not the only CEOs that are doing that. They're moving their families, some top executives, and their companies to enjoy what Margaret says is beautiful weather. And she's right. And what Craig is saying, some beautiful tax advantages. Thank you, former President Donald Trump. So I'm sharing this with you because, you know, I don't want you to ignore the South American demand side either. South America has always been good for 30 to 40% of annual sales here in South Florida. Always is 32 years of my career. So what we have now is this nutty domestic demand, people moving here together with those South Americans, particularly Argentina, Brazil, and Colombia. My God, do they love Miami? Do they love Miami? And Miami is Hollywood. Miami is Fort Lauderdale. It's one big dot on the map. So I didn't want to leave this webinar without really trying to explain the extent of the demand curve of per property here in South Florida and why it bodes so well as an investment opportunity.
And then, guys, just one question from Kabang, and I don't know who wants to answer this. Maybe Stuart, you or Sheldon or Craig. Elaborate on the 6-step process up until post-transaction. But I think whether it's 6 or not, but just what is the process from here for a South African all the way through?
Well, first of all, we would identify a unit. We'd go into a reservation phase. We'd then exchange legal docs. At the same time, we would be identifying whether it's going to be ownership in their own name or whether it would be going into the likes of an LLC. And then we would assist them in terms of sourcing the funding. So very similar to what happens here in South Africa, the banks have already done what we would know as desktop valuations. So the banks have already given the green tick in respect of the building meeting its criteria to have a mortgage over it. And then we would work on some numbers in terms of what sort of, deposit they would like to put down, what sort of, whether they want to go for a 60% or a 50%. And then obviously we would assist them in terms of externalizing the funds if the funds aren't out there. Source a tenant for them if they want a tenant, and then obviously close. So it's a relatively seamless process. And closing in the US is vastly different to South Africa. It's a relatively quick process. So it's not as laborious as it is here, where you can't get rates clearance for 5 months and nonsense like that. It works seamlessly.
No, it's very quick, and once you've got to just do it right. You've got to do it by the book. If you do it by the book, everything just goes right. If you mess up, it messes up. There's some words here they don't understand. Make a plan, they don't understand that. They only go by the book. So everything here runs by the book, 100% kosher, yeah.
And Margaret,
there's lots of checks and balances here. Yeah.
One quick question has come in, and it's just relevant before we wrap up, is for you, what do you look for when investing into property abroad? What's the one most important thing for you?
I think I look for low levies, what we call levies. I always forget what you call it here, the association fees. So the levy must be low, and you must be able to rent it. It must be rentable. So if you can buy something and rent it out, that's the way to go. And I think that's basically what you look for. You look for a good return on investment, and you've got to be very careful. You've got to be careful here. You've got to know what you're doing, and that's why I want to be there to help the people, because I learned the hard way. You think that everybody in America is honest, that they really aren't. So it's a whole different world, but it's a very fast-paced world. It's very as I say, if you play by the rules, you stick to the rules, everything just goes very, very quick, and it's very quick to do, and you will get that return on it. Yeah.
And then just before we wrap up, I just want to quickly just show, we're going to share this link on the chat, but this is just a tool that's been created with the ISG team, which just gives people the ability to actually see the building itself. So you can go into the different facilities in terms of what's available. And Mark spoke about that. I mean, the pool deck itself is quite a thing. But then being able to go up the different floors, you have the ability to search in terms of where price ranges are specific to the building itself, in terms of where those are. And then you also have the ability, if that's particularly the price range you've chosen and that's the floor, you have the ability to actually go into those specific units in terms of how you view it across floor plans or price lists. And then actually being able to gauge with that particular unit, where we've got Matterport views, we've got views from the units themselves. And this Matterport tour is quite nice if you actually want to go into the units themselves in terms of what a typical unit actually looks like, which I think is great in terms of showcasing bricks and mortar and everything else that comes with it, wide loads. And I mean, this is like we say, we've got a completed product, and you can go to the different units, but also through the renders, and just a nice tool for anyone who wants to really understand the product, the pricing, and then obviously be able to chat directly to the 12-star team here on the ground. The contact details have been shared on the chat, and then facilitate it from there. But very exciting. And again, I think a huge thank you to the entire panel. We could talk for days, but we'll be happy to answer any additional questions that people have. We'll share the recording, and then Stuart and the team can take the discussions forward with anyone who's interested. So yeah, I think it's just a big thank you. I don't know if anyone's got any parting words they want to share, and then we're going to wrap up.
Steph, I would really just like to
Let me just say that my team is here 7 days a week, 7 days a week. So whether it's Stuart or Margaret or Sheldon or you, in fact, Stefan, any of your clients have a question, we're with the exception of Christmas Day, we're pretty much open all the time.
Yeah. Steph, from my side, I just really want to thank Craig and Margaret and Sheldon. I know it was difficult to get some time out of Craig. You know, he's been traveling quite extensively through South America, and Margaret's been traveling all over the world, and we managed to eventually get some time, and it's been great to have this webinar. So thank you very much. Really appreciate it.
Yeah, and my
Well,
closing.
thank you for the invitation. Thank you.
So thank you so much. And yeah, for anybody who really wants to speak to somebody who's been through it and knows the whole story, you can contact me, margarethirschrealtor.com, and I'll be happy to help.
Thanks very much. Thanks very much,
my sole responsibility is managing wealth and providing South Africans with a soft entry, soft landing into the US.
Beautiful.
So I hope everyone has a great evening. And like we said, we'll be sharing the recording tomorrow, and as well as any further information, as well as the link to that marketplace. And yeah, thanks again, and have a great evening.
Great.
Thanks, everybody.
Cheers.
Bye-bye.
Bye.